What's going on, everybody? Happy Thursday. Special trade to black, 4 o'clock. Why? It's earnings season, as we're seeing more and more of a reality of where this industry is based on some more reports. We've got resilient operators versus people that are burning cash. That's just the reality in the cannabis industry right now. So up next, NewLake Capital CEO Anthony Coniglio is going to join us, talk about their latest print. Actually, a strong print on behalf of this company and some real numbers that grab my attention. We'll explain a little bit more in just a moment. And Seth Yakatan, cannabis investor and consultant, will be joining us in about 20 minutes to talk about what the earnings season so far represents. And again, what we should be looking for. And speaking of looking, let's look for Anthony Varrell here on a Thursday. Good to see you.
How's it going?
I'm good. Happy Thursday.
Yeah, it's different.
Different?
This, Thursday back to back with Wednesday, Thursday, Friday.
What do you think of the...
Should get Trulieve, and Trulieve is out.
What do you think of the Blazer? I brought this out of the back of the closet. I haven't worn this in a couple of years.
That's nice.
She's a little tight.
Trulieve did 310 million top line, international revenue of 35 million, and adjusted gross margin of 50%.
Comparable to what? Same time last year? We'll get into that a little bit later.
Yeah, we'll get into that. I'd rather jump into the year-over-year decrease of 9% on the top line.
All right. We'll get into that in a little bit. But as I said off the top, let's welcome in one of the more impressive prints so far in the earnings report, Anthony Coniglio, friend of the show, CEO of NewLake Capital, which trades on the OTC under the ticker symbol NLCP. Good to see you again. How are things?
Things are great. Good to see you guys. It's Pope Thursday.
It is. He's American. He's American.
Yes.
The brand's back.
Yes. I can't wait till the commander-in-chief comments on an American. I can only see the memes now. America is back, and no matter where you are in the political spectrum, it'll be entertaining.
Yeah.
We live in interesting times, don't we?
Yes.
There's never been an American pope.
Never.
No.
Well, if you think about it, it's only been about 10 to 12% of the time that the Catholic Church has existed that there's been in America.
I guess that's true. That's a good way to put it.
Yeah, can we just start from the top again?
It's big news. It's big news for the Catholics.
I'm sure it is. Let's get in. It's earnings week, which is why we're here on a Thursday, and begin with your latest earnings, Anthony. You posted another solid quarter. Revenue was up. Rent collections remained strong, and you maintained a conservative payout ratio. So explain to us the stability. I know, and the times that we're in, knowing it's, putting it mildly, very volatile right now.
Yeah, no, it's difficult. We're really happy with what the team's been doing within the portfolio and also cautiously investing in new deals. And we could talk about that. Yep. First off, thanks for giving me the chance. I always love talking to you guys about different topics, but from time to time, you give me the opportunity to chat about NewLake. So I appreciate that. It was consistent with our expectations, which in a volatile world that cannabis is, I think is at a premium today. No news is kind of good news in a business like ours. We continue to have one tenant that has some financial distress, is in receivership, but we've been talking about that for a few quarters now. And we were able to put up 51 cents of AFFO. We paid out a 43-cent dividend. That's, as you pointed out, an 84% AFFO payout ratio, AFFO being our key measure of free cash flow, which is within our guided range of 80 to 90%. So we feel pretty good about where we sit today and where the portfolio sits with, just to give people a sense, stability in the portfolio is about the quality of the tenants you have and the quality of properties you have. So our top 3 tenants would be a Curaleaf, a Cresco, and a Trulieve, some of the better operators in the industry. We're pretty happy with the results we've put out.
Can't underestimate that given the times that we're in right now. So how sustainable would you say is your dividend strategy moving forward, knowing it increased nearly 5%?
Yeah, when you look at dividends for REITs, again, I go back to that AFFO payout ratio. That's the measure. When you look at a REIT, take a look at the dividend per share and the AFFO per share, and then look at the quality of the portfolio, and it tells you how sustainable that dividend is. And so when I say 84%, why don't you guys take the inverse and say, wow, there's 16% cushion to their free cash flow to continue to pay out that dividend. And so if we had issues in the portfolio, we could see 16% of the portfolio go away or go into default, and we'd still have enough cash flow to cover the dividend. So that's that key metric that investors and REITs look at to get a sense for how reliable is the dividend. And like I said, our guided range to feel comfortable is between 80 and 90, and we're at 84%.
How are you feeling about, let's say, 2025 and the industry on a go-forward basis this year? I mean, we've seen several prints so far. I mean, they've been flat to wanting us to have a little bit more. Yeah, I'm trying to be kind. You've had strength in your numbers. We've seen a couple of companies that have had some strength in certain data points. How are you feeling about the industry as a whole moving forward?
So I'll start with one word, and that's optimistic, because that's forward looking. But there's a lot of wood to chop here for the industry between here and the benefits of reform. We continue to see operators doing the hard things that they need to do. You've heard me say this before, continuing with headcount reduction, separating with assets to generate cash for their business, and really streamlining operations. When I look at those revenue numbers and it's down, I said it to you guys earlier, I think we're woefully underestimating the impact that the hemp-derived products are having on this industry. I think that it's taking a bigger bite. I was recently in Illinois, in Chicago, and I was walking down the street, and there was a hemp retailer, walked right in through the front door, no frosting on the glass, was a very frictionless experience from a consumer perspective, and he was selling hemp-derived product. But the way he presented it was not, let's just say, well, he wasn't being deceiving. He was being honest, but there's no way your average consumer would understand the difference.
None.
So I think I think the numbers are showing us that it's having an impact. I don't believe Americans are consuming less state legal cannabis to that degree, or consuming cannabis to that degree. And I don't think you're seeing the margins and the unit prices go down that dramatically. So to me, I think it says it's something about hemp. So we've got to get through hemp. But back to the optimism, because I'm a glass half full person. The optimism that we have a lot of reform. On our call today, I talked about the introduction of various bills in Congress. I talked about the DEA administrator's commentary. You guys had a great segment last week talking about his commentary with Shane and what that means. I also point to the fact that the Supreme Court gave the DOJ an additional 30 days to decide if they want to appeal a federal circuit court ruling that said it was unconstitutional to strip Americans of their Second Amendment rights. Noteworthy, because I think we're going to get insight on how this administration views cannabis, and will this DOJ persist with that reefer madness type of perspective that it used in these court cases during the last administration, where they labeled cannabis users as dangerous to society, full stop. Which we all know is ridiculous. So there's a real opportunity for this administration to have a break with the past. And so we'll see. I have to be optimistic until they prove me wrong.
Well, one of the things that Terry Cole said, it's data, not ideology. And you can't forget that. And that's all we've been basically screaming at the top of our lungs for the last how many years. And that's the biggest selling point. Forget what you think. Show me the data. And that's the most compelling part of the whole statement of this, right?
I totally agree, but we do have to also say that while there's optimism, we all have to operate our businesses, and most people do, to not expect reform. Your business has to be durable and has to be able to live with the status quo. Certainly what we've done with our portfolio, you have to live with the status quo and benefit from reform and not hope for it and think that it's going to impact your business.
I think that's a major theme.
You brought up the whole hemp side and how it's making an impact on the industry. We've said it's grown to what? Same as cannabis right now. It's a $30 billion industry. Do we have an idea as to how big the hemp industry was, like as little as, am I correct there? You nodded your head in the wrong way. Anthony.
You know what? I don't know. I've seen numbers all over the place. I have not yet come across a data source that I feel is reliable. And that's no disrespect to anybody who's putting out those numbers. I just think there's numbers all over the place. And I think we need better data.
Okay. Forget my follow-up question.
But it's sizable.
Well, I was going to say, like, how big was this industry, let's say a year or 2 years ago? Because we weren't talking about this as much 12 to 18 months ago, but it seems it's part of our conversation every single day. But no real numbers to really calculate as to where we really sit right now.
No, but anecdotally, it's exponentially grown because the retail outlets and the pervasiveness of availability of these products is so much greater today than it was 24 months ago.
Yeah, absolutely.
So it's definitely anecdotally exploded. I will use that word. In many states.
We always talk about
for me, if I can purchase gummies online with a credit card and they show up to my door via UPS, I am never going to the dispensary. There is no reason for me to go to the dispensary. Flower is a whole nother ballgame. But if I can buy gummies that are tested, that are naturally derived D9 cannabinoids that come with a COA, I can pay with my Amex, and they just show up at my door, I'm never going to a dispensary. There's no reason to. Zero. That is eating into the industry. Flower, like I said, totally different ballgame. I wouldn't trust, I don't trust what's sold online when it comes to flower. And most of the THCA flower I don't trust to begin with. But I think Anthony's right. Like it is eating into, it eats into these business models.
Yeah, that's for sure. Another thing we always talk about on this show is debt maturing and when those are due for many companies. You virtually have no debt until 2027. Your debt to asset ratio sits at 1.6%. So does this give you more flexibility to act if we see distressed assets or opportunities in the market here in the next year?
So we have $84 million of available, or $83 million of available credit capacity under our line, plus $20 million on the balance sheet. So over $100 million of so-called dry powder. And we've been looking for opportunities. In fact, we've announced that we closed 2 acquisitions so far this year, both dispensary deals, smaller deals with Cresco, quality name in the industry, a partner we like very, very much, and we think they execute very well. So there are opportunities for us to do accretive transactions out there. And when you say distressed assets, I might say there are opportunities for us who are capitalizing on distressed sellers with quality assets. And there's a distinction, right?
Like the
a
way
distressed asset won't have the cash flow profile. You've heard me talk before about how we underwrite. We focus on the property level cash flows, because if the property is generating revenue and free cash flow for the tenant, they'll continue paying rent. It's a pretty simple formula.
No kidding.
So if you have a quality asset that happens to be owned by a distressed owner that looks to sell, then you're finding that quality companies can step in and acquire those assets at distressed prices, but it's a good asset.
When you think of without naming any company names, when you look at valued assets, are there any markets in particular that really interest you that you're paying attention to?
For us, it's about not just the market, but obviously about the quality and the balance sheet strength of the operator. States that we're looking at, you can see that we executed deals in Ohio. Those are the 2 deals. So we definitely like Ohio and think there might be continued opportunity in Ohio. We're looking at Kentucky. That's an entire state that needs to have an infrastructure built out, right? So, we're looking at Kentucky. What I like about what I'm seeing in Kentucky is people aren't beating down our door. And so you might say, well, why do I like that? Different than 3 years ago where everybody was looking to build out 100,000 square foot facilities. People are being a lot more thoughtful and a lot more pragmatic about investing capital into these markets. And I think that's positive for the long-term construct of that Kentucky market. But we're looking at Kentucky, and we're starting to look more and more at markets that you would have heard me 2 years ago say we won't go near. So we'll look at a market like a Michigan or a California because they're becoming more mature. Okay, so we always underwrote markets where you'd see price compression. I want to be clear. I'm not saying we're running out and doing a ton of deals in Michigan or a ton of deals in California or Colorado. But when you look at what's happened in these markets, there has been a flush of operators, those that haven't been able to do it. And in particular, you watch the price per pound in some of these markets, you saw it come down significantly.
Yes.
And then you start come back up, people came back into the market, and then it came back down, and then people exited, and you're finding this equilibrium. It's almost like a class in economics about supply and demand. And so as you see more of that equilibrium play out, you feel like you can predict I don't want to say predict the future. You can feel like the volatility has minimized. And when you have a little bit more stability, it makes it easier for us to underwrite. So I'm not saying that we're going to go running into those states, but it almost opens up a little bit more of the map for us, where we were focused only on the limited license states because they didn't have that type of volatility.
Yeah. Well, I'll be happy to share that before we got on here, I got a LinkedIn request from a collections agency that said we can connect with you and then we can help you out your business. But I told them that I think I'm in good hands, knowing that I looked at some of the stats that you just reported. So if I reach out to anyone, it might be your team, Anthony. But your rent collection rate was reported 98% this quarter, which is impressive to say the least. So based off of that and moving forward, like, are you seeing signs of any distress at all? Or has really like a lot of your underwriting process help, I guess, insulate that portfolio?
Yeah, we see distress all around this industry for sure. But again, I go back to what I said, a key part of our underwriting is around cash flow at the property level. And so it's quite simple. If your property can generate revenue and free cash flow for the tenant, then there's a easier availability to be able to pay rent. And so that's going to ebb and flow. We do have a property in our portfolio where the operator's in receivership. That was that portion that we weren't able to connect. We had one tenant that utilized part of their security deposit, but they got back onto cash pay in the end of the quarter. And so you're going to have these ups and downs for any business. But by and large, we feel pretty good about utilizing property level cash flow to underwrite our deals. And that gives us, and we monitor that on a quarterly basis. And in our investor deck, we present that data in an aggregated fashion to our investors. And so we look at that, and that's what causes us to feel good about the quality of the portfolio, good about the ability to continue to perform the way we have, and feel good about the opportunity to deliver this AFFO payout ratio that we've had for the last few quarters.
Yeah.
One of the markets that we talk about a lot now is the EU. I know you were in Germany a couple of weeks ago. We were in DC. You were there with us in DC at the GCRS, which was a European-focused conference. Was any interest in deploying capital potentially in the EU, and how was the sentiment around that conference? Because I know that you weren't the only U.S. CEO that was present there.
That's right. So the sentiment was high. Yes, that was a blatant pun that I utilized, but no, it was very positive sentiment. I think it was a combination of legalization has now taken hold and growth is really strong in that market. But I also think a big part of it was relief that the new German government didn't roll back any of the progress that was made in the previous administration.
No kidding.
Right.
Okay.
There was some fear. And so I think there was a collective exhale because that happened shortly before the conference. There's also excitement with the belief that the remainder of the continent will follow in the coming years what Germany has done. Importantly, that they are gathering data, and in the next year or two, they'll be able to release data about the efficacy of their program and any potential negatives that have come. And we think that other countries will follow suit. So why were we there? Yes, we're there looking at opportunities. We have some of the top operators in the country in our portfolio, and to the extent that their business takes them elsewhere to other regions, and we want to be a good partner to them, it's important, in my opinion, if we want to be a good partner, we have to be able to execute anywhere in the world they'd like to execute. And with international providing some good growth opportunity for the sector, it's important that we understand that market, and we could either potentially follow them or identify some European operators that have quality, that have the right type of property level cash flow profile that we see here in the US. And maybe we could deploy some capital. And we have some strategic relationships within our board and the people that are around our company where we could tap into some European talent that understands the European real estate market. And so if we do go over there, we'll be utilizing some of that talent because, again, we're US and it's important to understand the local specifics.
Okay, so ICBC is the event you attended, just for people that are learning, but that was held in Berlin. What would you say the turnout was? How many people attended, you think?
The turnout, they said it was the best turnout that they've had in ever. I think they've done it 12 or 13 years now. I would estimate there were thousands, probably a couple of thousand people there. There were a lot of suppliers there. Think of it as a combination of MJ Biz and Benzinga, right? So you
Okay.
had
Great
some
show.
sessions that were more capital industry focused, and then you had a big floor with a lot of exhibitors around products and services. So it was very well attended. And as I said, a lot of energy.
How are the products and services? Did it look like it had the level of sophistication that we're seeing over in the States? I'm only asking because I know that it's a medical first market.
Yeah,
in
for
Germany
sure.
for the most part.
For sure. In fact, I'd say that a large part of the suppliers, hard for me to put an estimate, 25, 30% maybe, large part of the suppliers were American and Canadian. Wasn't just European suppliers. There were a lot of Americans, a lot of Canadians over there, whether it's lighting systems, extraction equipment, all that cultivation equipment, a little bit, actually not so much on point of sale, because in Germany, that distribution point is through the pharmacist. So there's a lot more growing focus. And yes, you're absolutely right. Very pharmaceutical over there. The emphasis, and it's a different tone. I know when we talk about the business here and growing the business, we talk about state activations, and tax revenue is typically, tax revenue and freedom are typically the two things that lead. And then maybe you get to the patient impact. Here, I shouldn't say here, I should say over there, they lead with the patient impact because it's very pharmaceutically oriented.
It's good.
Anybody talking, and it is great. It's fantastic.
It's great. It's
nobody talking about the tax impacts and the tax benefits of growing this. And here's something interesting. Think about the socialized nature of medicine in Europe and the ability to have governments reimburse for medical cannabis. And that's what you're seeing in Germany. I had estimates of somewhere between 10 to 20% of sales in Germany are reimbursed by the German government.
Yeah.
And so, that's
some in Canada as well, because we're similar to Europe. But yeah, we saw it in Washington. It's medical first, and that's why we continue to emphasize incremental steps. And we can talk about, is it the right approach as far as, the medicinal side? The reality is that we don't even have cannabis rescheduled here in the US. And I think the cart was put before the horse, where as much as we claim, we want to look at the medical side, I think this was built on a recreational play first. But now that we're kind of backtracking, it's become very complicated, and it shouldn't be. But that's the number one thing I see over in Europe. And I just wanted to get people just to kind of an understanding, like, you've got events in Spain. You've got another one coming up in Berlin in June. You just had one in Berlin. Like, it feels like in the EU, it's like the cannabis landscape is kind of like with all these conferences that we were experiencing 3, 4, 5, 6 years ago. Does it not?
Yeah, I agree with that. I'd put them probably 6 to 8 years behind us, right, in terms of maturity of the market, in terms of scale. But there's enthusiasm for a wave of legalization in the coming years, the way we had enthusiasm for that wave 5, 6, 7 years ago.
Yeah. So
did you smell cannabis or see people consuming cannabis on the streets, just around the city, not at the conference, because that's probably a given?
I spent the conference was a little bit outside of the city. I got there based on flights. I was there half day early. So I went in, I'd never been to Berlin. So I went into the city. I did not, interestingly, I did not the way I do in a New York or in a Chicago. Yeah. No, I didn't.
Okay. Because I was curious, because I know that was one of the SPD's main, I don't know, not SPD, the CDU is the new majority government. That was one of their main knocks, was that you could smell cannabis everywhere. People were just smoking it, walking around.
Good question.
Which is the only reason I asked.
Good question. Yeah. Well, someone might ask, okay, Shad, why are you asking that question if there's like so much euphoria around? But what does that translate into the American players and Canadian players on what this European market might present? Because as they look to expand, obviously they need to pivot, but translate that, what that means for companies like yourselves and for a lot of the North American players, knowing the excitement that's building within the EU market.
I think if you're a North American, set NewLake aside for a moment. I think if you're a North American cannabis business and you're looking for incremental growth, here's an entire region that can deliver that growth over the next 1 to 7 years as these individual countries in the EU get added to the legalization landscape. For the Canadians, the opportunity is export, and there's a lot of exporting happening from Canada into the EU. because the cost to produce, particularly in Germany, from a labor and power perspective, is very high. It's cheaper to import from Canada, import from Portugal. That's why you see very few cultivation facilities in the country of Germany. There's only 3 licenses there anyway, but a lot of it is imported. So that's the opportunity set. I think for those to take advantage of it, need capital, however. And that's where I think the limitation is. There's not a lot of companies in North America that have the excess capital to go ahead and make a meaningful investment in Europe and have that beachhead, if you will, into the continent.
Yeah.
So the opportunity is growth. And for us, it's the same thing. It's, opportunity to have quality assets with quality operators, delivering additional revenue and AFFO growth for our shareholders. It's why we're paying attention to it.
It's good.
Yeah, I think Boris probably made the most shrewd move with buying the Canadian LP,
Yes.
and then just exporting over to the EU versus going over there and setting up shop.
Yeah.
Yeah, and he has investments in the region.
Yes.
So he has investments in the region. They seem to be doing well over there. I think you just said that their international business grew. That's not
35 million for the Q. So I mean, you figure 140 million annualized run rate, and it's over 10% of their quarterly revenue. It's not small potatoes anymore. He said he would start to talk about it once that business unit exceeded 100 million in annual revenue. So and so let's I'm excited to talk to him about it on Monday, and I'm assuming that's going to be a big focus in what's going on over there within the European Union. He's got a head start on all of his peers.
The cost of electricity in Germany is through the roof. Well said, Guap. It's expensive here in Canada as well, but don't get me started on electricity costs in this carbon net zero based on Canada's election last week and what our future looks like. But we want this turn into a political show. But again, remind me, Cresco, Curaleaf, and who's the third? But basically,
Trulieve.
as far as
top 3, Trulieve.
Right. And, we see some challenges of other companies in the industry. We won't name names. People can do their due diligence, but this is all part of having a disciplined approach and making sure that you're with the right companies at this stage of the game, which obviously explains the print that you just reported. So great job. And I don't think we can underestimate the term discipline in this industry right now. We keep saying it, but great for you and great for checking in here today. And congrats again, and let's keep in touch. Okay.
Yeah. Appreciate the chat, guys. Always good talking to you. Thanks so much. Have a great day.
Thank
you, Anthony. One of the great guys in the industry, just honestly, very disciplined, as I keep saying. But I think a lot of his background in Wall Street and his experience there definitely has come into play, and really a great person to work with. And it's evidently clear with a lot of the major companies in the industry, right?
Yeah, absolutely.
All right. So we've had a lot of prints come out in the last 24 hours. We're going to recap some of the stuff and really the takeaways so far that we've seen in the earnings season so far. So with that, let's welcome out everyone's favorite guest of the podcast, Mr. Seth Yakatan. Cannabis.
Wow. That's quite an intro.
What do you think?
Sure. I think it's amazing. Thank you. What a great great listening to your last guest. That was awesome.
Well, thanks for paying me $1,000 to say it off the top. We'll say that every single time that you're on, right?
So yeah, you got my Venmo, right?
Exactly. How's things? Good for the most part?
Things are great, mate. Yeah, things are great. Everything is good here. Sun is shining. Another beautiful day in California. We're ready to roll, and we're just getting queued up for earnings season. Trulieve, GTI, Verano, and I guess Curaleaf came out today as well. I didn't have a chance to look at it before the show, but Did
Terracin report after market today, or is that
Terracin's out?
The Irish,
they did
right?
71 million for the Q.
Okay. Irish, you're my boy, Blue. Good to see you. Old school, 2006. What'd you think of the print that Trulieve reported? And it seems right now, I was a little surprised with GTI, but I don't think we should get too carried away. But your takeaways with the two big behemoths on the first unofficial day of earnings season.
I think the signal that you're going to see in market is flat to down as the top line trend across the board. You've seen that now kind of twice.
Yeah.
My takeaway from the Trulieve print was that it seems like she has righted the ship in terms of margin improvement. So I think she's got great gross margins. There was a lot of discussion about something that you and I, the three of us, I think, have talked out a lot about offline on loyalty. What was really interesting to me was that, she's got 625,000 members of her loyalty program, and it's that loyalty customer that's driving revenue and driving walk-ins, and that her loyalty customers, I think, were coming in 2.5 to 3 times more frequently than her non-loyalty customers, and were driving revenue. So I think one of the things you're seeing at the MSO level is that if you can own customer and you can get them to come back into your store, and you can figure out how to operate profitably, you're going to survive. And here's the thing: surviving is winning.
Yep, good point. Do you see that? You live in Florida, and I'm not saying Trulieve is the only state that they operate in Florida, but when it comes to customer retention, do you see a lot of that, Anthony, based on your experience and some of the people you speak to in Florida?
I don't shop at Trulieve. I shop at Sunburn and the Flowery, but I know that all of the loyalty programs in Florida, I mean, they were. Kim had very strong language to use around the loyalty program. It's working for her. She said that she's going to take a more data-driven approach and leverage special offers with certain products and form factors. They've got a hell of a consumer base in there too. I think she had mentioned the PR announced that there was a little bit over 625,000. She had mentioned 650,000 subscribers. That's a big number. That's a lot of direct touch points to your consumer base. And she also had mentioned that she expects her peers in the state to still drop price. So I'm assuming they're still going to get some price wars going on. I was talking to Brady yesterday. Brady's actually raised his prices and been able to command price with Sunburn. I mean, he's gone from an average unit price of 18 to an average unit price of 24. So he's not playing price wars. He's been able to command the consumer and actually leverage the brand to raise his prices. She's expecting other people to drop prices, which I'm assuming she's alluding to Curaleaf and Move and Verano in the state. But yeah, I mean, she's getting it right when it comes to loyalty and customer retention.
You brought up a really interesting point there, Anthony, because I've had quality. I've had a team down in Florida for the last 6 weeks. They've been in the grow operations of almost every major down there. You're shopping at Brady at Sunburn and Elad at the Flowery because they have great product. They have the best product. Yeah. My team, that is probably one of the best expert cultivation teams in the world, told me that the Flowery is one of the 7 or 8 best cultivation facilities that they've been in on the planet, right? Yeah. So I've been very critical, Shad, historically saying large MSOs necessarily don't know how to grow great weed at scale. So Kim has, glommed onto the fact that she has a broad consumer product model. Yeah. She's selling McDonald's cheeseburgers. She's real happy selling McDonald's cheeseburgers.
They sell a lot of cheeseburgers.
Over 1 trillion sold. Bring them in. Going back to Trulieve, though, I think she's done a nice job. The only neg that I could throw on that story is that, she still has a $500 million tax liability there, which is kind of floating and waiting, and it's going to drop eventually. I think Trulieve as an organization has taken a pretty aggressive stance there, and that's probably about the only thing that I didn't that I could say is questionable about what they're doing.
These guys are liking this trend that we did yesterday. Who is Shad? You mean Chad?
So here's the thing too, Seth, and I mean, I'm sure you could appreciate this. Q1 2024, they had 196 retail locations. They did $298 million in sales. Q1 of 2025, they had 229 retail locations. So more than 10% an increase in retail locations, yet flat top line. That gives me pause to a certain extent. Granted, her margins are industry leading, 62% gross, 37% net. Can't hate on that. But when you expand your retail locations that much and you stay flat on the top line, you're either getting your lunch eaten by hemp or price compression is happening around the footprint.
Something's happening. I think with a lot of these big ones, I was on another conversation yesterday where I'm telling people, hold serve, right?
Yeah.
Just hold serve. Holding serve is going to be okay. look, our market cap from a capital markets perspective has been conditioned on up and to the right and constant growth. And I think what you're going to see across all these names is they're kind of like this for the next year or two. And
I think you're right.
okay, survive, muddle through, refinance your debt, put cash in the balance sheet, own your customer.
Yeah. IIPR, I'll bring that up. I know we've talked about this and how sustainable that dividend is moving forward, but first initial thoughts, did you get a chance to see their numbers? And again, what was the takeaway from what you saw?
I did not have a chance to review their announcement. I know, looking at where they have been historically, I believe that there's a lot of volatility in that portfolio.
Yeah.
And
they continue to collect rent, deliver high AFFO payouts, but as it's saying here, just in my notes, tenant base under stress in parts of the industry, which we've seen.
So the stock reacted well. I think the stock's up 10% since the print. It was up another 4.25% today. I think it was at like 51 when they printed, and it's about a little under 56 right now. So it's one of the stocks that actually has reacted positively to the earnings print.
Yeah,
I mean, I did a piece on them a while ago on LinkedIn. I haven't delved deep into the default risk in their portfolio, but they have 25 to 30% of the assets that they have funded that are just defunct. So if 30% of your fund's underwater, I don't care how good your print is. I'll make it really easy for you and your listeners. Just buy more NewLake. Okay, it's real simple. Just buy more NewLake.
It is. I mean,
it's real
16,
simple.
I think 16% of their entire rent roll is PharmaCann, which was their main problem. And
Forefront and Gold Flora, and I can keep going.
Yeah, it's up 17. IIPR up 17.1% in the last month. But how much was it down the previous two? It's good.
And remember this capital market that we exist in is a micro cap market that trades on event news, not fundamentals.
Okay.
If you dig into the fundamentals of IIPR, I'll let your vast listener base, who includes the CEOs of many companies, because they call me to tell me how much they enjoy your program and my appearance on it, is that it's working. Your viewers can
you
can
speak to them to see if they want to invest in the company? We need to raise $2 million. What do you think?
I'm gonna give you a shout out. Call Jason Wild. He's listening.
I'm sure he'll like that question.
He is. He's probably going to text me now.
Yeah.
I'm sure he's not going to text me, but call Jason Wild.
Look, we're only 48 hours into our latest earnings season here, Q1 2025. When you take a step back, are there any trends, signs that you're seeing that tell us about the health of the U.S. cannabis industry heading into the second half of the year?
Look, I'll echo the sentiments of your last guest. I think at the highest level, you're going to see flat to downward top line trend. I don't think that undermines the strength of the industry. You have a $30 billion industry.
Hey, it's flat okay right now?
Flat's hold serve.
Yeah.
Hold serve. Flat's fine. Flat's a win. Flat, win, own your market, own your customer, don't expand, don't take any more money, live to play another day. That's fine. You have a $30 billion industry. You want to know what? It's probably going to be a $35 or $40 billion industry next year. New York is half penetrated. Pennsylvania is coming online. Virginia hasn't started.
I like that, my friend.
Come on. Tell me about hemp. Tell me about disintermediation. Tell me about leakage. Tell me about whatever you want. There's something which I'm doing a post on this in the future. Hoodie threw up some data last week that no one else has seen other than me that basically talks about the fact that their estimate is that cannabis should be about $800 a household, and that $800 a household per annum is where cannabis gets to in legal markets. And they plot where the market is now versus where it should be based upon $800 a household and real penetration. And California, according to that estimate, should be a $9 billion market, right? Florida, according to that estimate, should be a $6 billion market.
Yeah.
Right.
So if you look at the relative amount of cannabis penetration versus where it should be, you still have a lot of upside to go. Now, look, whether that's federal, whether that's hemp, whether that's black market, those are three things that are difficult to quantify. But the fact that you've conditioned the investment community over the last 5-7 years for logarithmic growth because you're turning on new markets, that's not true. Remember, the smartest guys in the sector, the guys at Bengal Capital, talk about the concept of excess EBITDA, where a market's going to come online and for 2 or 3 years it's going to be wild, then it's going to go off. Turn down. That's what's happening. So when you look at the relative amount of penetration that still exists, I think cannabis could be $100 billion, annual revenue market. So you're just cracking the iceberg, the tip of the iceberg, and you're in the middle of kind of a blip in terms of where we're at in the development cycle.
Can we get Bengal Capital to sponsor this feature with you?
Boy, I'll tell you, they are dyed in the wool gram value investors. So unless we're going to do something for pennies on the dollar, I do coffee with those guys once in a while. So we'll talk.
Anything you guys want to talk or discuss regarding Verano? Anything that grabbed your attention?
Yeah, that came out.
What I won't even press it, but
it wasn't a bad quarter. I just got my gripe that they pulled their they pulled their guidance on a state by state basis, which I like. I enjoy going through that.
What do you think that means?
I think they just wanted to put the veil back on. They just didn't need to be out there.
Here's what I will say. I've been very critical of Kim. I've been very critical of Kim on your show. Delivered. She's delivered in the last 2 quarters, and she's brought, even though foot traffic's down and top line is mez, her margin profile is great.
It's great.
Verano hasn't figured that out yet. Verano's margin profile was down almost 180 basis points quarter over quarter. So they're losing it up top. They're not controlling the cost on the bottom. It feels like they're still figuring out what to do and how to get their footing underneath it. I still think it's a good company, and I like the team there. But what stood out to me was the fact that they not only declined at top line, but they declined on the margin profile side, where you saw Kim and Ben marginally hold court at top line, but increase in other metrics.
Yep. Queen of the South for a reason. She understands Florida. And when you're in that ball game, you better come best with your A game. That's for sure.
She does. She does for sure.
Yeah. I think that's pretty much it for today, but this has been great. Always love catching up with you.
When's Glasshouse reporting?
Yeah.
Tuesday. They report on Tuesday of next week. I believe that's on the 13th.
Can you talk to Kyle and his team?
We need to get Graham and Kyle on after earnings.
I reached out to his assistant and I was busy one day, and I think my email was a little bit short, but can you just put in a nice...
I've got them both on the thread.
Just tell Kyle.
I'm in the office every Friday. I will have lunch with Mr. Kazan, and I will deliver the message. He will also be in Chicago if you'd like a one-on-one. And John DeCourcy is now in there running PR and IR on an institutional level. And I certainly think you should talk to him as well. He's been phenomenal. So
we met him a couple times.
Great. We're really lucky to have him. When I first started to look at the industry, I read his research. He was like one of the first analysts I started to read. So it's just great to have somebody like that on the team. And, I think investors will hopefully be pleased with what we have to announce. So it's another solid story. I was fascinated to hear NewLake talk about the ability to consider California. Look at how far we've come. 2 years ago, California was like saying, I got COVID and syphilis and AIDS and Ebola. And now he's considering doing deals in California. The other thing is that he talked a lot about international. International's coming on strong. I'm on the board of the second largest company in Australia called Canitrek, and we have been looking at making some moves globally. And I think keep an eye on the name Canitrek, because I think it's going to be coming in the news. And that Australian, Canadian, European market is really where you can have growth. It's definitely where you have opportunity for growth, and I've been looking at it a lot personally. So,
all right, good to know. Nice,
gentlemen.
A breath of fresh air.
Always, always, always so grateful for the opportunity. I do want to tell you that I probably have 5 or 6 people a week, and I mean CEOs of big, big, big companies who say, I saw you on Trade to Black. Thank you for not saying anything bad about me. So they're watching. They're watching. Okay. They're watching.
All right, sir. Always great catching up with you. Thanks for the feedback. And
it was 100% mine.
if we don't get a chance to have you on before Ben Zenga, we'll see you next month in Chicago. Okay.
Drinks on me. How about that?
Beauty.
Sounds good.
Thank you, sir. Have a good one.
Thanks.
Thank you. All right. Bye-bye.
Bye.
All right. Mowing along here on a Thursday afternoon. Tomorrow morning, 11 a.m., we're back, right back at it. And with Charlie Backdill from Cresco, followed by Ziad and Jason Wild from Terracin. So another banger podcast with the big names.
Charlie was on a panel at ICBC in Germany about MSOs exploring the European opportunity. So we'll be able to talk to him about that as well. And then Jason Ziad will be on to talk about earnings, their closing of the Ohio acquisition, that retail location, and then the agreement that they just entered into to expand the New Jersey footprint.
Yeah.
And their earnings call is coming up here in 14 minutes. I think it was 5 o'clock.
Raging Gun. I've got a team of like 5 people that run these live streams with producers in the background. So it's not me that's making some of those comments, but with all due respect, just be cool. Okay. You're all right. Yeah, this has been a good week so far. And I like some of the trends that, Seth kind of outlined, and hold serve seems to be the big takeaway here. And that's not a bad thing, here in Q1 of 2025, right?
Yeah. Yep.
Anyway, all right, good stuff, my friend. Everybody, thanks for logging on here on a Thursday. Busy week. We'll be back here tomorrow, Friday at 11 a.m. In the meantime, enjoy the rest of your day. And we see you with Jason, Ziad, and Charlie here on Trade to Black tomorrow morning at 11 a.m. See you then.
See you guys.
Now, that was a good one. What'd you guys all think? Did you like what we had to say here today? Do you agree, disagree with what we're saying? Love to get your feedback. As usual, leave comments below. Trade to Black is growing, and we wouldn't have done it without you. So if you haven't done so, please subscribe to our YouTube channel. You can also check us out on Apple and Spotify for the audio version. And as usual, leave lots of comments. We, as I said, love to hear back from you. Thanks again, everybody, for watching.